Welcome to Investing Confidential. Fed spoke yesterday. They were hawkish. No one cares. Fed kind of didn't mention what they're going to do in the future. They couldn't stop. They could. Everyone cares about that. Everyone's begging for a pivot. So the market goes up. The market is ignoring two very important factors that are going to affect stocks and the economy, earnings, and the real estate market. Okay. And I'm going to lay out what's happening in the real estate and why you really should be worried about the future of this economy. But for now, stock market's breaking out, massive short squeeze. Okay. Trust me, this is a massive short squeeze. If you don't think the meta rally today, you think the meta rally today is just people buying, you're smoking something. This is a short squeeze, a classic short squeeze, and a classic bear market rally as far as I'm concerned. Traders right now can ride the wave. I still think there may be better entry points for investors. But as I said a few months ago, the U.S. stock market is getting more and more like a casino, and it used to be a leading indicator. I think it no longer is, and I don't think it ever will be. And you really have to look at individual stocks going forward. So let's talk about real estate here, because the market is certainly ignoring what's going on in the real estate market. And the real estate market is just really starting to decline, and it's a leading indicator for the economy. So first, I want you to hear what I said in the fall right now.
The reason real estate's been rising since the financial crisis, and especially over the last few years, is one reason. We've had one institution which started this whole boom, and then everyone jumped into the pool, and they're doing the same thing. And that institution was Blackstone. Blackstone has been buying thousands upon thousands of single-family homes for the last 12 years, every month, sight unseen. So they kept taking the supply out of the market and buying homes and renting. And it's been a great business for them. They've been doing that for years. People have been benefiting. But what has that caused? That has caused a major problem with real estate supply, especially in the middle to low end, where, the American dream, right? Supposedly the American dream. Since they've been successful, a lot of people have piggybacked them. Hedge funds, other large investment funds, and then you have a bunch of public companies like Zillow, companies like Open Door. They took advantage of this opportunity before the pandemic, and then right after the pandemic, raised a ton of money and just started buying thousands of single-family homes, sight unseen, every month. Imagine you have hedge funds, Blackstone, Open Door Technology, Zillow, about 10 other public companies, literally each buying thousands of homes every month. Okay? That's the reason why you who are listening to this, if you've been priced out of the real estate market, that's why.
Okay. Now take a look at this. This is an article that sums up the disaster that is Open Door Technologies, which is something that I mentioned a long time ago to flag as a canary in the coal mine. Okay. Open Door Technologies is out of business, folks. Okay. This is one of the companies that I mentioned in this recently in that clip that was buying, tons of stuff, single family homes, sight unseen, driving up the prices, had nothing to do with people, had everything to do with institutions, as the article points out, rightly so, which is what I, conceived more than a year and a half ago, what was going on. So, all these institutions, they're all come down to Peter Piper, including Blackstone. Okay, Blackstone is not only not buying any homes, they're selling homes in the market, and now they're trying to evict people, as you see here. Why are they trying to evict people? They're desperate. Okay, they know that evicting people is bad, bad for reputation, et cetera, but they don't care because their investors want out. They're blocking liquidity. They're desperate, so they're just going to start evicting people. This is a major problem, and it's a liquidity issue. There's no liquidity in real estate, absolutely none whatsoever. That's why Open Door and Blackstone, they're trying to sell things at any price. Okay, when people sell real estate, they're very price conscious. That's why people get burned, because they don't sell right away. They wait for 2-3 years and then they panic. These institutions, they don't care. They're going to hit bids. They don't really care, and this is what they're doing right now. And because they need liquidity. Their investors want liquidity, and in case of Open Door, they don't have liquidity. They're going literally chapter 7, not chapter 11, chapter 7. Okay, so what is this all telling you? These guys smart money, they dumb money. I don't know. But as far as I'm concerned, the strategy was dumb, and this is dumb money selling. And as in this article says, individuals can take advantage of it. And I think, as I mentioned many times in the past, if you have patience, you're going to be able to buy the American dream at a discount. Just have patience. So, but what's happening now? Okay, no matter how you slice it, when you look at housing sales, pending sales, prices, they're all distressed. Okay, the real estate market is distressed. This is just the beginning because there's no liquidity. We have a big spread between buyers and sellers. There are bids being hit, but you've got a very distressed market. Okay, today, for example, the morons at CNBC celebrated mortgage rates going to 5.99%. Put that in perspective. Okay, a year and a half ago, people were locking in below 3%. Now they're celebrating 6% mortgage rates. I mean, give me a break. Okay, no one's going to come in at 6% mortgage rates. Again, there's a buyer strike. Okay, and there's a lot of sellers out there. Don't let anyone tell you otherwise. Okay, look at existing home sales. Okay, folks, we're at a decade's low. Okay, this is really bad. Okay, you can't, these statistics you can't get away from. And there's nothing in the offering that's going to turn this higher. Okay, look at housing permits. They're plummeted. They're almost at the great financial crisis in quotation marks. People are looking at this like, yeah, this is nothing. But we're going to get to, if not surpass, the problems in the housing of the great financial crisis. I mean, think about that for a second. Okay, look at permits for single-family home construction, down big. And yet, look at the price of home builder stocks. They're at the highs. They're at 52 weeks highs. It makes no sense. Okay, how could you have, as you can see here, permits for single-family home construction down, and you have construction stocks at all-time highs? It makes no sense. Housing affordability. Okay, below the great financial, this is the worst on record. The worst on record. And yet they're telling us the economy is in good shape. The only thing booming, as you can see here, is multifamily home construction. Okay, this sounds like the World Economic Forum is behind this. Okay, why would they behind this? They want you to be a renter forever. So what are they doing? They're building tons of multifamily homes. And as you can see here, the real estate market and the economy are correlated, real estate being an early cyclical. But folks, I really believe this is a bear market rally. It is violent. It's going to, if you're short, obviously you probably want to cover here because it looks like it could be moving higher in the short term, but this is a violent rally, okay? We've got a lot of earnings that are going to come out and things may turn, but right now, the market is just, everyone wants the Fed to be done with it. They want rates to stop. But if the Fed, let me just say this, if the Fed does stop, inflation will come back, and it's probably going to come back very strong. Okay. The indications are inflation is starting to come back. If that's the case, the Fed has once again made a policy error, and they're not going to be able to get out of it. The Fed's done. Okay. Powell's done. Okay. And then all bets are off. Okay. Buy gold, buy Bitcoin, whatever. Dollar's going to get tanked. Okay. As I mentioned before, the action for the market in terms of appreciation for an investor is overseas. Okay. You got the EU is much better value. Japan is much better value. Emerging markets. Right now, China looks very good in terms of valuation, in terms of momentum. This is a stock picking market. But all bets are off if we get a tick up in inflation. So as an investor, be really, really careful out there.